Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. All is not well with the Mumbai headquartered Diwan Housing Finance Limited, DHFL, the housing finance company which has got borrowings to the tune of 1 lakh crores, of which it owes 45,000 crores to a clutch of 30 banks. 15,000 crores it owes by way of fixed deposits to the public, and the balance it owes to mutual funds, pension funds, provident funds, and those kinds of lenders. The company has been facing a huge liquidity crisis, and despite the fact that it has been selling its assets, the funds are not enough to meet its repayment obligations. DHFL has been defaulting on its interest payments on its repayment of NCDs. It has also defaulted on repayment to a bank of late. It is unable to raise any more money from the system. Its credit rating has been downgraded to default by 3 rating agencies. Its business operations have come to a halt. It has said to have sold assets worth 30,000 crores, which is not proving to be enough to meet its huge liabilities. And most importantly, it has delayed the declaration of its quarterly results on the ground, on a very specious ground, saying that the directors have not been available to approve those results. That's not a convincing reason, and it indicates that the troubles of DHFL are far deeper than what they appear to be. And in this background, the fact is that SFIO has been investigating the affairs of DHFL on the basis of findings of a Cobra Post investigation which said that the promoters of DHFL have siphoned away a shocking sum of 35,000 crores. That investigation continues. If some kind of a default happens in case of DHFL across the board, after the body blow that the system suffered because of the default of ILFS, the collapse of ILFS, this time, if this kind of a major default happens across the industry, you can be sure there will be a contagion effect. There will be a domino effect which will reverberate in the entire banking and financial markets of India. It's a huge amount that DHFL owes. Even though it has not yet been declared an NPA account, it owes huge sums of money. And if these monies, it defaults in its repayment, the entire industry will be very adversely impacted. Perhaps that is the reason why this time, unlike in the case of ILFS, where the system did not come to the rescue of ILFS and let it snowball into a complete collapse, this time it looks like the government has instructed the banks to come to the rescue of DHFL, and a rescue plan seems to be in the offing. Reports say that the banks have entered into some kind of an agreement under which it is working out a rescue plan, a bailout package for DHFL in order to avert a complete crisis. This plan has to come out by the 29th of July as per the Reserve Bank regulations, and it could include either fresh loans being given by banks to DHFL or a larger tenure, a longer tenure being given for the repayment of loans by way of a restructuring. It may include banks buying the loan portfolio of DHFL. It could also include some kind of a one-time settlement or converting the debt of banks into equity of the company, or it could even include a change in management. But the effort of the banks at the moment is to give a breather to DHFL to avert its collapse, because otherwise, as I said, there will be a collapse in the system. The system can't keep taking these kind of huge defaults every time. On the surface of it, it is made out that DHFL is a victim of external factors, that it is facing a classic case of liquidity mismatch. To us, it doesn't really appear to be as simple as that. The findings of Cobra Post, which said that the promoters have siphoned away 35,000 crores, need to be investigated, and a clean chit needs to be given to the management before one could say that the crisis at DHFL is on account of external factors and not on account of internal factors, internal mismanagement by the management of DHFL. It would be wrong to give DHFL a privileged treatment of a bona fide defaulter in case it is not one, because in that case it needs to be meted out punishment that a malicious defaulter, a mischievous defaulter deserves, as we are seeing in the case of ILFS. So a hurried settlement of dues of DHFL or giving it a rescue package or restructuring its loans without looking into the conduct of the management would not be a done thing, and it would actually set a bad example. In case banks are able to work out some kind of a rescue plan for DHFL, then you can be sure there are many other NBFCs which would be in the queue looking for some kind of a restructuring, some kind of a bailout plan, as we are seeing problems in cases like Reliance Capital, large NBFCs facing liquidity crisis, facing probably balance sheet crisis. The fact remains is that DHFL's model of restructuring our loans could apply to almost every other NBFC which has been struggling to survive at the moment. The news comes that yet another large default by a Mumbai-based NBFC conglomerate is in the offing. This NBFC has a large exposure to stressed assets. It has a large exposure to real estate, and that is where its mismatch is said to have happened. It also very recently had a fracas with Anil Ambani in the matter of sale of shares. In case this kind of a default happens, you can be sure that the entire system, the banking system, the financial system will be shaken up. The Reserve Bank already admits in its last report that if any big NBFC now defaults or collapses, it would impact the entire economic system because it would be like collapse of a large bank, and that needs to be averted. In order to avert that, the Reserve Bank perhaps will have to come out with standard guidelines to give restructuring option to these large NBFCs so that their default does not completely destabilize the system. But that should come with a warning. Only those NBFCs which have got bona fide reasons for the default, which have not indulged in any kind of transaction that violate the laws, whose promoters have not siphoned away money, whose promoters have not given away money to related parties, and whose lending has been bona fide, only those kind of NBFCs should be given any kind of a restructuring option. And those who violated the law certainly need to be punished. We have ILFS as a shining example of promoters of an NBFC being punished for all their malicious criminal misdeeds and mismanagement. This is Akhilesh Bhargava signing off till we meet again. Namaskar.